What is the market outlook for property investors and developers in 2020? In this series of 5 videos, I'm joined by 4 renowned property experts, and in each video, each expert will share with you their predictions for what the 2020 property market has in store for you. This is a must-watch. And you're going to want to be taking some notes and sitting down with a cup of coffee and watching all this series of 5 videos. Before we get started, remember, if you're new to this channel, make sure you subscribe and hit the bell icon, because we release new content each and every week, and everything is dedicated to helping you be more successful in property. Also, smash that like button, it really helps us out on YouTube. And also comment down below whether you agree or disagree with what's being said. Comment and let us know.
Let's not also forget that governments are very indebted as well post-credit crunch, so they can't afford to let it rise too high either. But
Wait. So more than half this country has no debt on their houses. Tends to be an older group, but basically more than half of the residential homes owned by the person have 0 debt. We could put interest rates to 50% and it won't affect their house. They have no debt to service on the house. Second of all, governments are locking in things with long-term bonds. Unlimited maturity bonds, 10-year bonds, 30-year bonds. They're not going to get a big sticker shock if rates move. It does matter, they're constantly churning, but don't assume that the world will just keep rates low. Just because it would be ugly if it wasn't. We had ugly. What was it, Nigel Lawson? He raised the interest rates by 3 percentage points in an afternoon. It went, I think, 15 to 18% in the afternoon. That was to try to defend sterling. Found out he couldn't do it, ran out of money, Soros won, and a lot of you lost houses.
I would say that there's a fairly unique circumstance happening, and the thing that's changed now is that globalisation has meant that if you look at the G20 countries, the interest rates do seem to move in sync. So what you would be saying is that we would be out of sync with every major economy.
Or they all move.
Seem to, yeah. So what we'd have to have is all the G20 pretty much going in that direction, which is upwards. And at the moment, over the next 5-6 years, there doesn't seem to be anything that's there that would cause all those countries to change direction. Correct. The days of the one country, one major economy in isolation is that much out of sync, I think are long gone because of the way we also interconnect.
You could also hedge with overseas mortgages as well, in theory.
Use that on currency.
Yeah, be
The
careful.
currency is more
The
volatile.
arbitrage would negate it, but I would agree with what Ranjan is saying there, and with John, in that personally I don't think rates are going to get up to the level that you've indicated in the next 5 years. However, on a 10-year window, there is potential for that. But on a 10-year window, you also have to look at the fact that there's been inflation of earnings, therefore affordability becomes more affordable. So I don't think in the short-term window it's going to happen. And then to put that into a bigger picture perspective, when you look at the banks and how they're regulated, and look at the Basel funding formula, where they have to keep X pounds of reserves based upon the loan to values. Therefore, one of the things which I feel the government and the banking sector should be looking at is not the Section 24 taxation of landlords, but actually stress testing the banks based on loan to values. And the more the banks lend, therefore the more the interest rate is, or the more capital the bank have to keep on their balance sheet. Therefore, that would self-regulate and dampen the market.
If I could just say one thing, I mean, I in all my years, I've never really bothered about interest rates. What I bothered about, because I can't control them, what I bother about is what I can control. And so when I buy a property, my initial gearing might be a little bit high, but I've got a plan within 3 or 4 years to get that down to 60%. And that might be through capital appreciation, or it might be through chipping away into debt. But if I maintain that 60% and less across the entire portfolio, then I don't believe that there's anything on the horizon to kill you. High gearing is the killer. It means that you can't withstand any shocks. What Fiona's doing, and I'm looking at a few projects like this, where you're buying off developers who are going bust, basically. They've just done things with high gearing and only one exit strategy, which is sell onto the market. If they did their projects with lower gearing and with alternative exit strategies, like I'm working with people who, one people I'm working with, they have just built some new development in Reading, but because of the way they've funded it, they're able to, they're not selling basically, but they are able to refinance it and keep it, and it's a good rental investment, and you can just bat it out for another 4 or 5 years and sell it later. So low gearing gives you survivability, and then you don't have to worry about predicting
No, I
all this
totally
stuff.
agree with you on that.
Exactly.
I think it's
Yeah.
really
Carol?
Just further to what you're saying, Ranjan, you're saying really that anybody around the 60 mark have a better chance of survival.
Yeah, I think so.
Oh, good.
Chance. So
There's always a chance. Yeah.
notice it's chance of survival, and partly, I'll tell you a real quick joke. So I'm in the woods with Rod, and there's a bear. I don't have to outrun the bear, I have to outrun Rod. So you want to be the one who survives when the one next to you goes under. And your cash flow with Fiona's 10-year locked rate, I mean, her risk is a lot lower for 10 years. The neighbor landlord might go bust, go out of business. When prices fall, you'll notice that rents rise. So the landlord wins with falling prices because the rents are going up. The landlord wins when rents go down because it tends to mean prices go up, or the yields go down.
Yeah.
So it's about staying in the game, which means a little bit lower interest or mortgage, fixing the rates. You want to create this longer runway, have a portfolio, have some free clear properties so that you're still in the game when everybody else goes bust. Because most of us are still going to be here even in that period. So someone's going to rent your place.
If Corbyn comes in, we'll all start though, I don't know.
So what's the actual problem, that he's getting squeezed and can't afford to service the loan?
No,
Or?
they're pulling in the loan.
So can
Yes,
he
but-
refinance it against
Well,
the asset?
That is a
Because
possibility,
what-
but he's got everything on one big.
So this
Yeah.
That's a different issue.
This is less about
That's a structure issue.
That could be more of an issue that the bank needs their money back.
That's why.
And it's a commercial loan, and they can and they are. I mean, one thing I always say, and I get banks, they take me out for lunch and all of that, and I said, look, you're a great bank, but I can't give you any of my business because you have your risk management policy, I have mine, and that is I'm not going to give you more than 25% of my debt portfolio. And all you have to do is say RBS 2008, and they know exactly what you're talking about.
So they won't be able to pull the loan unless it's in the contract that you sign. So you need to reach your contracts.
And it is in commercial contracts.
Yes,
Well,
exactly.
buy-to-lets, it is, isn't it?
Yes, exactly. Generally by the it wouldn't be, generally commercial would be, but he should have read that, or his solicitor should have told him to read that. Because once a year they can revalue the portfolio.
Yes.
And it's a bit arbitrary, but it's what he signed up for.
So the picture is to have several lenders, is that what you said right now?
Yeah, you've got to split your lending. You can't be
Slave to one lender.
well, that's what I've done. I just don't want. I was really scared, particularly in 2008, 2009, with all the stories. Lots of friends who had RBS loans. RBS was in serious trouble, and they called the loans in because they could. I had some RBS loans, but fortunately they were very old loans from 2003. And my contracts just said 1% above base for 25 years on commercial loans. And they couldn't touch them, because in my contract, it didn't say they could revalue or anything like that. But the people with 5-7-year money, particularly who had had more recent loans, they were all stuffed. They were given 90 days to refinance their entire portfolio at a time when the credit crunch happened and fewer lenders were in the game.
I've got a couple of very good friends who are based in Lubbock in Texas, which interestingly enough is the town where Buddy Holly grew up. Back in the credit crunch times, they're developers. They had quite a big sort of turnover of money. They did a lot of borrowing early on, and they paid it right down. So when the credit crunch happened, they were unencumbered. They were running on their own money. All their competitors had the loans called in, and by default, they became the biggest developers in West Texas, and now they employ more than 200 staff. They're doing very, very well. And in the same way that, for example, Richard Branson did when he was starting Virgin Airlines, and with 2 or 3 days to go, the engine failed on the plane, and the banks would not stump up the cash for the extra engine, and he had a whip round. There are times when, provided your cash flow is strong enough, you can be independent from the banks, and that's when you really start to fly.
Yes. It's also that if you're in that situation, because I bought businesses at 2009 to 2014, you can dictate the price, really dictate the price, because you're in control. You're the man with cash in your pocket, and everybody wants out.
It's the old saying of cash is king, and being the contrarian and having the strong nerves and putting in the offer and then making it work at the price that you paid.
Yeah. If you know your business, what you're doing, and either the property, the area, or whatever, you can't go wrong.
Possibly private tenants being able to buy, having first refusal to buy the properties at, say, a third discount to market.
Do you think it's realistic they get that through within a term?
Yes.
Okay.
So one thing, they might get that through, but whether it would survive a challenge in the courts later. But do you have a decade to wait to find out?
Yeah.
You could have the caps rent, you could have other things. Now, it doesn't mean that everything that Labour wants is wrong. It just means that the popular vote will elect Donald Trump. He's going to save America. Like, almost nothing he says is true. But, you know, what has he done?
Yeah.
Other than try to do some illegal things.
I think I was having the debate earlier, and the point is, politicians will say whatever they can to get themselves into a 70 grand a year job. Once they're in the job, they'll go, well, it was my colleagues over there who stopped me from doing it. They blocked it. Therefore,
it's obvious to me some things like they're not going to just close all private schools because where would they find the 9 billion to build the replacements for 600,000?
They're not financially literate. You're assuming there's some financial literacy there.
So we know some nonsense. That's why I'm trying to extrapolate which ones are genuine threats and which are just nonsense.
I think when I talk to people, and what I find amazing is that I find very few people who are successful, not just in business, but also in professions, who aren't thinking about leaving the country, basically. You know, I know of people now who are out there scouting homes in Portugal, in my circle.
I do.
So, you know, there's going to be an exit, because if you think about it, you know, personally, I do business and entrepreneurial activity because I enjoy it. If these bastards are not going to make it fun anymore, because they hate us, basically, then you will go where, if you're in an abusive relationship, what do? You get out. If you're in a country which is completely abusive to you, guess what? You know, there are loads of countries out there, and then 10 countries where you can just walk in and get a visa, passport, and favourable tax treatment. Here's the hidden secret, right? Any country is a tax haven if you weren't born there. London is a tax haven for people who weren't born here, because Britain attracts high net worth people from around the world. In the same way, you can swan into countries like Malta, Portugal, Canada has a system. There are loads of them that have very, very favourable tax rates. So you will go where, if you are being abused in this relationship that we have with our government, with the state here, then you will go where you are treated better. And there is a whole list of places where you can go. I was on a TV show a couple of months ago, and this question was asked, and there were 4 people on the panel, and everyone on the goddamn sofa said they're out of here. hurry up with the runway in Heathrow.
I was having a rummage around in the attic the other day, and I came across my parents' passport. That was from the middle of the sort of Wilson time in the 1960s. Exchange controls, 50 quid, and you had to stamp in the back of the passport. And I remember 98p in the pound, top tax rate. I remember the winter of discontent with big mountains of rubbish, 3 mountains.
So wait a minute, did people hear that?
98p on the pound.
The top tax rate took 98p out of your pound
Yeah.
as the top tax rate.
That
was
I
one
think
suits
we would
nobody
flip
to
this on its head
some
based on what Oliver has said. Because Oliver was saying, what happens if Corbyn gets it? My belief is that if you looked at it from the other side and the Blues got in, the UK will become an offshore tax haven for Europe because they will be looking at what they call Reaganomics, the policy of dropping tax rates to bring investment in, to bring jobs, wealth creation here, which will actually drive more tax than raising taxes.
And on that point, I'm afraid we'll have to leave it. Thank you to everybody for coming along tonight. Thank you in particular to the panel for having us. See you again sometime.
If you enjoyed this video, hit the like button. If you're not a subscriber, what are you waiting for? Subscribe, hit the bell icon. As soon as we upload, we'll let you know. And enjoy these. They're all dedicated to helping you be more successful in property. Happy investing!